Hola guys, ¿qué pasó? What's going on? Hey, this is Hala Pablo. Thank you for tuning in. I thought I'd do a real brief Bitcoin update since we're seeing some rallying. I don't want this to go on long. I did quite an extensive one yesterday uh, about the feasibility or the possibility of a liquidity run as we approach this resistance line of this macro trend, or rather this regression trend. Is usually an area where we see liquidity runs happen. And the reason for that is we're at the threshold of a drop. We're at the threshold of a markdown, a sell-off, which is going to bring us down back into this macro support area, this long tilted green rectangle. Now we have the fractal ranges here, 2021 and 2025, and we've been going off this schematic since January, and it's played out very, very well, very, very accurately, as many of you can attest who've been following this channel. And so we're going to continue following it until we have good reason not to. So far, it hasn't given us reason not to. The anchored VWAP, or the ice barrier, we have two, and they're anchored to the corresponding events for both schematics. The first one, this pale blue one, is anchored to the PSY of this distribution top, of this double top, and then the lower one, the dark blue ice, is anchored to the low of this, where the we had this accumulation range and the deep spring, which started this whole new system. So we have it anchored correspondingly here for our current cycle. And so, like currently, we are playing out right where we're right on schedule, where we're supposed to be. You guys want to see something cool? Let me show you something. Let me show you something. So we're having a little rally here, like we talked about, like a little liquidity run, right? See, this is the current one. This is the one that appertains to us, is 2025. So we've hit this. We'll just call this the first ice, or the dark blue ice. We hit the dark blue ice like it hit the dark blue ice back in 2020. Excuse me, 2021. Let's measure. Let's see how far it's gone. We'll just do it from the full body up to where we are presently. It's about 12, gone about 12%, 12.8, let's say 13%. That's if we go off the body proper on the candle. If we go off the wick from here, now I'm not counting this, I'm counting this one, this last one that we had, that went all the way down to the throwover area past the micro trend support line. If we go up to the top, that's 15%. So we've gone 15%, 15.23%. All right. And so let's go back now. Let's go back about 4 years and measure the rally, the corresponding rally in the fractal, that what we had according to that algorithm. Again, we're not going to go off this red candle. We're going to go off the bottom of this this consolidation that we see here under the channel midpoint. We'll go off the wick, the lowest wick. Remember, this is about 15%. So let's measure this one and see how far it takes us up to the top of this candle. Well, would you look at that? 14.8, practically 15%. So, yeah, the measurements are jibing. Even the measurements are jibing in these fractal ranges, correct? So, yeah, we've got no reason to suspect that this isn't anything other than a liquidity run, especially since we've got it on diminishing demand. Anytime you see, this is something that I shared with my group this morning, anytime you see in a regression trend, I think this is the chart that I shared with my group. So if you're not in the group, you're not in the Discord group, check it out. You should check it out, because I try to keep everyone updated. And there's also really good traders in there, and we bounce ideas off each other. But this is a chart I shared this morning, and it's kind of like what we've just been looking at. We've got the decreasing demand here in the VSA. And then here's the regression trend. In the two ranges, we have this redistribution, kind of like a linear redistribution, and a rising wedge. And the point of this chart is to warn other traders, be wary, especially since we saw these last two liquidity runs. This has a propensity to run this current range that we're in all the way up to the ice, and basically wipe out all the liquidity, all the short stops, short squeezes. And so it's done it twice already when it reached the top of this regression trend. And the first time it did it was on high demand, but then it quickly became engulfed and retraced back down to the micro trend support line. And ever since then, the demand volume has been diminishing gradually. Even for this second one, there wasn't even any demand at all noticeable coming in the vertical bar volume. And now here we are at the end, getting to this crucial juncture where the bulls really have to keep themselves above the ice to avoid just a major markdown. And the pattern that it's in is a rising wedge. Now, rising wedges are what? They are bearish, right? Yeah, they're bearish. All wedges are. Think of wedges as crooked tops. This is a wedge. It's a crooked top. Now, if it happens, now this is a top, right? Because this happened in a distribution. But this is a redistribution because this wedge is occurring on a selling climax, whereas this wedge occurred on a reaccumulation. So that's the only difference. But a rising wedge is a rising wedge, but at the end of a regression trend in a redistribution with the price action hitting the regression trend resistance on low demand, hovering between it and an anchored VWAP barrier, chances are, guys, chances are it's going to be a liquidity run, and we need to be careful of that. So the whole giveaway is the low demand. Low demand. So that's why you got to trade. You got to analyze with volume and price action together. The synergy is just explosive. It's powerful. It'll keep you safe. It'll keep you prosperous. And so, so we go back to these two sister trends here, the 2025 and the 2021, and we see the waves playing out tit for tat. If we go ahead and just see how things wrapped up in 2021, we had the distribution. It wasn't able to get past the first ice, came down, and no surprise because this was on, again, low demand. Now, we may see a difference this time around because if you notice, and we talked about this yesterday, the candles here at the beginning of this redistribution pretty much stayed in a confined area. It stayed beneath the first ice barrier and beneath the channel midpoint. You see this regression trend midpoint? It stayed, and it wasn't until the last, the end of it where it began to mark up. Whereas with this one, this is the corresponding range. We've had the waves, the swaths of the waves exaggerated with much more liquidity, much more aggression coming up and just doing these very aggressive liquidity sweeps above the ice all the way to the second ice and coming back down. It's not able to go past the second ice. This one hasn't even gone past the first ice. But this one is what I want to say has a propensity in 2025 to run. So we're looking at the possibility of this running up to this area and touching the second ice, which would be around the mid-90s, 93, 94. But so far, it doesn't look like it's doing it, but it doesn't mean that it won't. So we just need to be careful in this area. We need to monitor this closely and make sure that we don't get tricked. We don't get bamboozled. We don't become prey. We don't become liquidity for the market maker. So if you're given to impulse drive or momentum drive or scalp, then you can. I mean, I don't even know if I'd scalp this. It's just, I just don't like the volume in it. And if the pattern's unclear, I just would much prefer just to stay out of the fight. And so this is unclear, but I am fairly certain that this is a liquidity run. And so we just need to be patient, watch where it goes. We're going to have our eyes on the alts shortly. I'm going to be doing some updates on the alts. I think the alts will maybe gearing up soon. I have to do a little more VSA, a little more fractal range analysis on alts like Ethereum. We've been looking at Ethereum. I was looking at Filecoin and XLM. XLM is poised to do something very, very juicy, I believe. I don't know when. I don't have a time frame yet, but it's something I've been looking at, and I've been doing the fractal ranges. I've been doing the algorithm. I found the algorithm for XLM about 4 years back. And so just like we've been tracking Bitcoin with the algorithm, and it's kept us safe since this all-time high, the same can go for coins like XLM, which are in just massive descending. What is it? A rising wedge, or I forget the pattern that it's in. I don't want to look at it because I don't want this to turn into an XLM video, but we could look at it briefly. What the heck? And then I gotta go, man. XLM, 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 XLM. Yeah. So what was it about XLM? What was it about? Yeah, it's in a falling wedge. That's what it was. Test and break. Okay, so this is probably not going to make much sense to you right now, but this is something that I was. So yeah, it was in. It's in a macro. It's in a macro falling wedge. So falling wedges are bullish. So we're going to be looking at that more in depth, but that'll come later. That'll come later. I'll be sharing that with my group as we get close to the breaking point of it, and I'll be giving out my preliminary signals for that, and also Ethereum. And so these are some coins that I'm looking at, and I'll share them with you. Join our group if you like to take your trading up another notch, or subscribe. I'd always appreciate that, and that way you'll stay up to date with these updates. All right, guys, I'm getting distracted. I got to go. I got something I need to do. All right, we'll talk to you later. Be safe. Not financial advice, but you already knew that. God bless you. See you in the comments or in the Discord group. Adios. Bye-bye.